Fiscal year 2021 with one of the most challenging times in the recent history. COVID-19 saw market collapsing right across all industries. One of the most hard-hit industry was the airline sector. With the sudden traffic collapse almost overnight due to travel restrictions and lockdowns across the globe, the flights didn't take off the ground. The runways of the airport were just acting as parking lots of the air carriers. The enormous disruptions due to pandemic created uncertainty for both the customers and the employees and posed significant challenge for the aviation sector. Britain Airlines cut up to 85% of their scheduled flights in April and May in 2020. The European Airlines is a huge industry with a market value of around 280 billion and sells 1900 million seats every year. UK and German airlines are the major players, which together contribute 25% of the total market value. Impacted by the pandemic, the traffic declined drastically in the last year, from 1982 million in 2019 to mere 605 million in 2020. As the turnaround went deeper due to the pandemic, it raised the question, will the airlines ever recover from this?
The answer for this question came from the low-cost air carriers. As you can see, post-June 2020, airlines such as Ryanair turned the tide and showed a recovery path. Exploiting the model of no-frills travel, these budget airlines lowered the ticket fares and enticed passengers to travel at low cost. The recovery of the sector could be observed more likely from the companies which had solid balance sheets and stronger marketing positions such as Ryanair. The market capture of budget airlines is estimated to increase drastically in the coming years. The competition between the budget airlines is expected to be fierce and intense post-pandemic. The market leaders in low-cost segment are Ryanair, EasyJet and Wizz Air, which captures majority of the passenger market share. Ryanair in particular is a spearhead in the recovery phase. With its agile strategies and focus on cost control, was able to bounce back quickly after COVID turbulence.
Ryanair, which started its operation in 1985, is one of the largest airline groups in Europe, carrying 149 million passengers every year, with 2,500 daily flights over 86 bases. With a fleet of 470 aircrafts, it connects over 242 destinations in 40 countries. It's the Europe's first and largest low-fare passenger airline group based in Ireland. It's a public listed company with a market capital of 19.077 billion euros and it trades on multiple stock exchanges.
2021 was a mixed year for Ryanair. Our traffic fell down by 81% from 149 million to 27.5 million due to COVID. 99% flights were grounded in Q1 because of travel restrictions. We have booked operating losses of 839 million euros in 2021. Had to increase our debts by 28% this year, affected negatively because of Brexit in UK market and decline in share prices due to COVID. But the story doesn't end here. We had positives too on our side. We were able to preserve cash of 3.15 billion at the year end, successfully eliminated backlog of 30 million customers reaccommodation and refund request, had BBB credit rating from S&P and Fitch. Boeing 737 game changer order increased from 135 to 210 aircraft, started new 100 million training center in Dublin and ranked as one of the highest airlines in the world for environmental performance, receiving a B- climate protection rating from independent Carbon Disclosure Project. Factors have clear impact on our financials too for fiscal year 21. When talked about margins, our gross profit ratios reduced from 41.93% of 2020 to 24.78% in 2021. We booked operating losses of 839 million and our operating margin ratios went negative, that is 51.31% in year 2021. This decrease in the two ratios was primarily because of 81% decline of our scheduled revenues and 80% of our ancillary revenues, which includes in-flight sales, car rentals, insurance and many other services. On the other hand, we were required to incur several additional costs towards cleaning, sanitization, maintenance of aircraft for safety of our customers and staff. Moreover, several expenses like staff cost, depreciation, airport charges, etc., though reduced in absolute terms, but increased when calculated basis per passenger. This was further fueled by finance cost, resulting in negative net margins of 62.06%. Return on capital employed showed declining trend from positive 12.20% to negative 9.54%. This was because of losses booked by the company in current year, affecting share capital as well.
Though revenues and profits were negative, we focused particularly on preserving liquidity of company in tough times. Our current assets were very close to our current liabilities this year. Though in fiscal year 2021, our short-term debts were increased by 350%, but it was offset by a decline of 75% trade payables, 92% decline of derivative financial instruments, along with 50% decline of other liabilities. Similarly, our current assets also changed, where our cash equivalent financial assets reduced by 61% approximately. Payment towards delivery of 3 Boeing Game-Changer aircraft, this was major capital expenditure of the company. Because of proportionate declines on both the sides, current ratio stood 0.98 times as compared to 0.81 times last year. Since company is not required to maintain any major stocks, our inventories were very less and our quick ratios were approximately same as like our current ratio. Cash preservation was majorly targeted to cover our liabilities, which is why our cash ratio improved from 0.69 times last year to 0.89 times in current year. The inventory for the year 2021 was consistent with previous years. As stated earlier, the cost of goods such as fuel and oil, airport handling charge, maintenance and aircraft rentals, though reduced in absolute terms, increased when calculated on basis of per passengers. This led to an increment in the inventory holding period from 0.24 days to 1.07 days. Our trade receivables reduced from 67.5 million euros to 18.6 million euros in the year 2021. This was the result of the decline in turnover, which reduced our outstanding held with our customers. The receivable turnaround in current year was approximately 4 days as compared to the 3 days last year. We managed to reduce our trade payables from 1,368 million to 336 million only in current year. The major reason behind this was the group's revision of the agreement with Boeing in context of delayed delivery of Game-Changer and thus resulted in the reversal of pre-delivery payables of 497 million. The trade payable turnaround in the current year was 99.67 days, which was approximately same as compared to previous year because of the decline in cost of goods sold. For the year 2021, the debt to equity for Ryanair had increased from 0.86 times to 1.17 times. This rise was primarily attributable to successful addition of a 5-year unsecured 850 million euro bond, which was issued in September 2020, and a drawn down of 600 million unsecured debt under Her Majesty's Treasury and Bank of England's COVID corporate financing facility availed by the company. Because of the operating losses incurred in fiscal year 2021, we couldn't cover the interest expenses from our business income, which resulted in a negative interest coverage ratio of 12.03 times in 2021. But thanks to our well-managed liquidity, we paid all expenses in time in absolute terms.
For the fiscal year 2021, the EPS went negative to 0.91 times from positive EPS of 0.58 times last year. Though number of shares were almost constant, EPS turned negative because of net losses booked by the company. This was due to decrease in traffic by 81% and increase in COGS, operating expenses as well as finance cost when measured on per passenger cost basis. PE ratio in fiscal year 2021 stands invalid because of negative earnings.
There is no doubt that the airline industry in general and the Ryanair Group in particular has suffered a painful time in fiscal year 2021, during which our businesses, our schedules, our guests and more importantly our people have been devastated by the impact of the pandemic. But we have been successful in rebounding our traffic till September 22 by 128% from 17.1 million last year to 39.1 million this year. Company reported loss of only 48 million euros in current H1 as compared to 401 million loss during same time in previous year. As we grow further, we continue to offer the lowest fares with the most on-time flights and an ever-improving customer experience for the benefit of our 150 million customers annually, our hard-working 15,000 aviation professionals, and also for our shareholders who have loyally supported us through a very difficult past 12 months. At Ryanair, low fares made simple.